Hey, hi everyone, this is KT here. So today's video is about the trades being placed from June 9, 2025 to 13th of June 2025. So let's take a look at the portfolio now. So for the past 7 days, the returns is plus 1.48% and the S&P is minus 0.39%. So there is a slight gain in the portfolio. And we look at the uh, since inception, so the portfolio is about 182.83% versus the S&P 500, which is 40.36%. So I think my strategy is still sustainable. So let's take a look. Comparing to yesterday, I think there's a drop of about 13%. So it's probably due to the Israel and Iran war, which caused bearish price action on majority of the stocks. So let's see what are the trades that are being placed for the past week. Okay, so from the start of the week, sold Pfizer uh, put options at $167.5, expiring June 13, 2025. So got a premium of about 1.9 and 1.95. So I think I've explained that Pfizer is fundamentally strong stock with positive uh, fundamental indicators. That's why I wanted to hold this stock. So I sold cash out puts on this. And uh, next is AMD. So AMD, I bought AMD and roll it to from July 03, 2025, roll it to July 18, 2025 at the strike price of $120. At this point of time, AMD is above $120. So uh, I actually calculated the extrinsic value of the AMD that is left, and 50% of the extrinsic value has already eroded. That's why I decided to roll it. So I got a premium of about $1.33. So there's a credit for this trade. Next, for HIMS, sold positions for this expiring June 2025 at $46 strike price. So the reason for doing this is because op the premium gotten is about 0.52 credit. So it's more than 1%. So there's a price level that I chose to sell him put at, which is $46. Next, continue to sell puts for Pfizer, expiring June 20, 2025 at the strike price of 167.5. Got a premium of 2.3 credit, so it's still more than 1%. And then AMD puts that are $110 and then expiring June 27, 2025. So I bought back this AMD puts at a debit of 1.07 because I wanted to let it expire earlier, which is expiring June 13, 2025 at a higher strike price of $120. So in this trade here, I need to calculate the number of contracts bought times the uh, premium that is premium of, or rather the ask price of this position, and then sell the corresponding value of the puts contract for AMD expiring at an earlier date of expiration but at a higher strike price. So in total, there will be a credit of about let's see about how much. So it will be 2.5 times 10 times 100 minus 1.07 times 15 times 100, which is about a credit of about $835. Next, Pfizer. So Pfizer decided to sell puts for Pfizer at $24 expiring June 20, and the premium is about 0.32 credit, which is more than 1%. The reason for selling Pfizer is because I saw the price action of Pfizer. It's actually tending upwards, and then it's a defensive stock. So probably in times of this situation where there's the war ongoing, and also I'm slowly going into a defensive stock portfolio. That's why I decided to accumulate more Pfizer stocks. And also, I wanted to bring my Pfizer average price down from 27. So hence, sold more Pfizer puts at $24. So next, I also decided to close the Pfizer puts at $23. And then, so actually, this one of the reasons is because I have also having Pfizer puts at $23 and expiring at the same expiration date. So this is like stacking just to gain the additional premium of 0.22 here. Okay, next, STZ sold more puts for STZ because this stock is actually endorsed by Warren Buffett. So if I look at the graph of STZ, the lowest that it went to during the tariff is 160, and at that point of time it was about 175. So I sold the STZ puts at 170, and at different expiration dates, July 03, it's a premium of 5.01 credit. June 27, 160 strike price is at 1.65 credit. So HIMS, I bought back HIMS puts at 0.2 debit here because I think I wanted to let it expire earlier, as I wanted to get out of HIMS because it's quite, although it's a growth stock, but when I look at simply Wall Street, the uh, value of HIMS is actually overvalued. So I think HIMS is a speculation play, although its fundamentals are quite solid. But I think that I wanted to stay away from such speculative stocks and go into more defensive stocks instead. So I bought back the HIMS puts that's expiring at June 2025 at $46, and then sell more puts for HIMS at June 13, 2025 at $50. So overall, it's a positive net credit here. Next, saw an opportunity for Apple. Apple, the premium, one of the Magnificent Seven stocks, the premium is quite lucrative. So I sold Apple at June 2025 at $195 strike price at a credit of 1.98. So it's about more than 1% in the premium gain. And I sold Apple on July 11, 2025 at 195 with a premium of 4.4. And this I saw that at this moment of time on June 12th, STZ is trending downwards. So I decided to buy back the STZ uh, positions that are expiring on June 13, 2025 at 170 with a debit of 2.95. So I'm using the premium gain from Apple to offset the debit from STZ. Next, saw an opportunity to roll AMD from July 11 to July 18 at strike price of $125. At this moment of time, AMD is about $123 at the market. Uh, as of Friday, it trend down to $116. So I would say it's a good move to actually roll it at that point of time, in hindsight, because as it's nearer, as the uh, market price is nearer to the strike price, that is where the premium gain is at its most optimal. So actually at the money, if the market price is 125 and the strike price is 125, so any trades execute, you'll get the maximum amount of premium. So roll from July 11 to July 18, got a premium gain of 0.65, 0.55 credit. And also AMD puts at 120. Also because AMD is going downwards towards having a bearish price action. So I actually bought back the AMD puts at $120, expiring June 13, 2025 at a debit of 1.37. But I sold more puts for Apple, expiring June 20, 2025 at $195 strike price to have a credit of 1.49. So overall it's a credit gain. So what I did here is that I changed from the counter AMD and then changed to Apple, which is relatively more stable and I would say more defensive. Next, SoFi saw an opportunity in SoFi also. SoFi was trending upwards. It was about $15 ish, which is nearer to the strike price of $16. But now it's about $14. So same case for AMD. Saw the opportunity to roll SoFi from July 18 to August 1st. So in the process, got a credit of 0.3. Okay, let's see. And on Friday itself, sold calls for Pfizer because I knew that Pfizer is going to be a side. So got a credit of 1.45 for that. This is done at 80% probability of profit. So delta is about 0.2. So that's the reason for selling this calls. And also sold more puts for OXY. This is just to participate in the Israel and Iran war because oil is on the rise. So OXY as oil provider. So that's why I sold puts at $45 expiring June 2025. And the premium is about 0.5 credit. And this is more than 1% from the strike price. So during the weekend, gotten out of MU, so has completed the whale. I think I went to MU since the start of the year, so it took me about 6 months to do the whole whale cycle. So I think along the way, gotten quite a substantial amount of premiums from MU from selling puts and rolling puts and then selling calls and finally gotten out of MU. So we witnessed MU from I think I got in MU at about 105 and 110. Then I did the dollar cost average down to 95, and now it's back up to 115. So that's another successful wheel strategy executed for this counter. Okay. And then Fiserv got a sign and expert and Pfizer puts, Hims puts, SoFi puts, Pfizer calls and Hims puts at $47 have expired out of the money. So these premiums are all fully harnessed. So overall, that's the trades that were being placed for the past 1 week. In going forward, next week, I think let's take a look. Next week, we will be looking at some decisions with the Feds on whether will there be an interest rate cuts or not. So let's see. 17 June is a retail sales indicator. And then we have take a look. Fed press conference on 18 June 2025. And also the FOMC economic projections on 18 June. So 18 June, probably on the Wednesday, we will know whether the market will be more towards a bearish price action or a bullish price action. But nevertheless, my portfolio is positioned to withstand all this volatility because, as I have mentioned, I have gotten into the defensive stocks since the past 2 weeks. I think that's all. So remember to like this YouTube video and like this YouTube channel, and also turn on your notification bell. So have a great day, everyone. Signing off here.